Without a doubt, I would say that we do believe there is that there should be a portion of a client's portfolio that it's reasonably it's good reason to believe that you should have some portion of your portfolio in Bitcoin. That's a big, and again, I think that's a big move for the industry, not just for Morgan Stanley, but you're going to see a lot of these other money management firms saying the same thing, that there's a place in the person's portfolio for cryptocurrency.
Hey, what is going on? Welcome back to another CyberX video breakdown. Ending the month of July, what do we see? Bitcoin falling back underneath of $63,000 as $125 million has been liquidated from the total crypto market cap in the past 60 minutes at time of recording. We're going to break this down in today's video breakdown. I hope that you all aren't experiencing too much turmoil out there and are hanging on for the long run, because while institutions are not fearful in this current state and environment that we're operating in the digital asset ecosystem, and we're going to be showing you all that via some recent panel discussions that took place via a Morgan Stanley representative discussing and talking about the institutional outlook for crypto and institutions' allocation in the digital asset space. We're also going to be diving into the fundamentals weighing on market sentiment today and taking a look at XRP's price action, going over the dark pools in detail as we head into the weekend before we roll into the new month of August. So hopefully you all enjoyed today's video breakdown. Let's dive in. So starting off with the optimism first, we have the On-Chain Brokerage Summit. Fireside chat with Morgan Stanley's Chris Larkin. And real fast, there was the head of asset management at Morgan Stanley that provided this quote here: the underlying technology has been proven, and blockchain-based infrastructure is obviously here to stay. I want to fast forward. This video breakdown is from Zero Hash. They just put this out yesterday, July 30th, 2026, from the On-Chain Brokerage Summit. Only has 40 views, and listen to what the individual representative here says.
As you think about sort of asset allocation, we don't have a specific view yet, but I would say that imminently you're going to hear an announcement of our viewpoint on cryptocurrencies and the allocations for it. Without a doubt, I would say that we do believe there is that there should be a portion of a client's portfolio that it's reasonably it's good reason to believe that you should have some portion of your portfolio in Bitcoin. That's a big, and again, I think that's a big move for the industry, not just for Morgan Stanley, but you're going to see a lot of these other money management firms saying the same thing, that there's a place in the person's portfolio for cryptocurrency.
And what does that mean for people that maybe aren't so familiar with advisory? When a firm can advise that a portion of your portfolio can go into crypto, does that mean that everyone's portfolio eventually holds crypto, or what does that mean in practice?
No, I think as you go through, every client's got a different risk tolerance in the way that they want to think about it. So it's really just the idea that, I think it's sort of I think to me it's like, if you think about bringing something from an asset allocation standpoint, is that this is something that's here to stay. And this is not about Bitcoin or Ethereum, because in the end run, whether these are the winners or losers of the space, it doesn't really matter. It's just the fact that these cryptocurrencies or tokens that are available, there's going to be a place in the portfolio. That will evolve over time as well, right? There'll be more products that'll come, that the innovation will not stop where we are today. But I think to me, it just sort of, once again, solidifies the idea that this is here for the future.
Wow. If that wasn't bullish, then I don't know what else is. And again, considering the current market environment, we have individual representative from Morgan Stanley on stage at a recent panel event saying that now is the time to allocate into the digital asset ecosystem. And it is okay to have allocations to the crypto market space or to the digital asset ecosystem, right? So huge, obviously, of course, in my personal opinion, statement from a large systemically important bank. You weren't hearing the likes of Morgan Stanley, JP Morgan, so on and so forth, say these things just a few years ago. And interestingly enough, now, what are we at in the market? A discounted opportunity, not financial advice. Just again, take those things into consideration. You're not going to see your mainstream, everyday average ABC, NBC, whatever, CNN, right, play these video clips. But they just showed that the underlying institutional interest in crypto is at an all-time high. So let's read thoroughly through this report. Starting here, the total cryptocurrency market cap is now actually down more than $50 billion on the day when I wrote this report, this rising. We were down about $30 billion as several macro and geopolitical risks continue to discourage aggressive risk-taking. Hawkish Federal Reserve commentary, renewed strength in the Japanese yen, fears of a potential carry trade unwind, and ongoing instability across the Middle East have all created a difficult environment for crypto. And on top of that, we also had the U.S. 10-year Treasury yield rising to 4.738%, which is the highest that we've seen it at since January 2025. We know stronger dollar, higher Treasury yields tend to also weigh on risk appetite. Moving on to continue this, with the two hawkish Federal Reserve officials today reinforcing concerns, both dissented at this week's FOMC meeting because they preferred an immediate 25 basis point rate increase. We had an argument from Kashkari and Beth Hammock today, and their argument was straightforward. Inflation has remained well above the Fed's 2% target for more than 5 years, and waiting too long could make it more difficult and costly to restore price stability. Kashkari also pointed to a combination of supply shocks, including the pandemic, the war in Ukraine, and trade tensions, along with the Iran conflict, while adding that enormous wave of data center investments has introduced a new source of demand-driven inflation. These comments remind markets that although the Fed held rates steady, support for additional tightening is growing inside the committee. Geopolitical risks also remain another major overhang. Iran's Islamic Revolutionary Guard Corps said it targeted a U.S. base in Kuwait in retaliation for American strikes, while Tehran warned heading into the weekend that Washington could pay the price following reports of civilian casualties in Qassam Island. At the same time, the United States and Saudi Arabia have also reported that they expanded operations against Iran-aligned groups, and uncertainty still remains over attacks inside Iraq. Saudi Arabia has also announced a 14-member maritime defense alliance to protect shipping through the, I'm not going to butcher that, Bab al Strait and the Red Sea in the Gulf of Aden. Although there has been some progress surrounding a proposed Hamas disarmament, an Israeli withdrawal framework implementation remains conditional, meaning the region is still far from a confirmed de-escalation. Another major factor was the sharp strength in the Japanese yen during Asia and London session trading hours. Thursday, we had a suspected yen buying and dollar selling intervention, placed the currency on track for its strongest weekly rise since February, while trading volume surged to extreme levels across both spot and futures markets. If you guys have been following along with the video breakdowns that we've been making in the past, we mentioned that the yen carry trade unwind still remains one of the biggest risk-off factors that could unravel the current prices of crypto and take things much lower in the near future if we were to see that. The Bank of Japan also warned that underlying inflation could move above target and signaled that further rate hikes may come as early as September, with many analysts expecting another increase to 1.25% for their interest rates by year end. And the risk of a broader yen carry trade unwind still remains one of the most important threats to global markets. We know that the yen carry trade has allowed investors to borrow cheaply in Japan and deploy that capital into higher yielding or higher risk assets elsewhere. If the yen strengthens sharply or Japanese rates continue rising, those positions become more expensive to maintain. Investors may then be forced to unwind leveraged trades, sell risk assets, and repay yen-denominated borrowing. A disorderly unwind could reduce liquidity across equities, credit, and crypto, making it one of the biggest risks to speculative markets over the coming weeks and months ahead. Now, heading into the weekend, the Middle East conflict still remains a major threat to both equities and digital assets. Fresh strikes have reduced confidence in a near-term diplomatic solution, while disruptions to the Strait of Hormuz continue to threaten energy and shipping markets. Long-term treasury yields also remain close to multi-decade highs, as I mentioned, reflecting doubts about whether the Fed can fully contain inflation without additional tightening. For crypto to produce a meaningful bullish recovery heading into next week and into the beginning stage of August, markets will likely need several conditions to improve. Hawkish Fed rhetoric will need to ease, treasury yields will need to stabilize or move lower, the yen would need to not strengthen aggressively due to interventions, and fears of carry trade unwinds would need to recede. Oil prices and the Middle East tensions would also need to cool, allowing inflation expectations and geopolitical risk premiums to decline. Without improvements across at least some of these areas, any crypto recovery may remain limited and vulnerable to renewed selling pressure. So, multiple different macro factors weighing on the current market environment. With all of that in mind, coming over here to a post where I recently updated you all on the current dark pool levels that our software generates inside the private CyberX Discord, the accuracy of these levels and the content that we've been creating for you guys covering this level to level. I really truly hope that since we've been making these video breakdowns, you've seen that all the other shenanigans that exist out there on the internet, on YouTube and Twitter should be absolutely avoided, and you should want access to this insanely accurate data so that way you have access to a level playing field that retail traders otherwise, before this information was available, didn't exist, right? So going over the screenshots here, I mentioned sellers are currently defending the $0.0959 dark pool on XRP, with the $1.29 remaining the key level that we need to break above if we want to get excited about any sustained or higher prices, with a major hurdle for buyers at $1.16. Downside risks, of course, still remain, where if sellers can hold price below $1.09 and break below the passive buyer at $1.03, then lower prices are still imminent. With that in mind, heading over to the charts real fast to wrap this video breakdown up. As I mentioned, the total cryptocurrency market cap is bleeding out right now, down about $54 billion on the day. Again, as a long-term investor, not financial advice, offering some great discounted opportunities across the board. Personally, I think with a lot of the lingering catalysts in the background, the possibility of the yen carry trade unwind, geopolitical escalations, further tightening of monetary policy, that the risks are still skewed in favor of further downside. Unless those things change in the coming weeks/months ahead, then I'm still in favor of a lower XRP price, thinking that we are going to see the buyer that is recently defended at $1.03 give way, and we're likely to see the next dark pool come into fruition at roughly around 91 cents, which I personally have been targeting for quite some time. Now, that's not the guarantee things. We do need to see a risk-off catalyst to take us there, and of course, bearish price action in the midst. So with that in mind, right now, why am I saying that in order to see higher XRP price, we need to break above $1.29? Because as of time of recording, we are still operating in this most recent bearish leg from A at $1.29 all the way down to B, where we created a new bearish leg on the higher time frame down to $1.03. We're currently operating in this consolidation range, but we can see the monthly high on July currently exists slightly above the dark pool at $1.16, with the June monthly low hovering slightly below the dark pool at $1.03. So with that being said, as we roll over into August, if we can see buyers defend this base at $1.03799, turn it into support, the first major hurdle is going to be where sellers are constantly trapping buyers at the $0.0959 dark pool, where we can see there was a previous seller that aggressively broke this dark pool, where it previously acted as a support. They engulfed that buy volume, trapped buyers, and aggressively pushed price down into the next dark pool. I mentioned to you all over on X that this was likely profit taking from sellers. And then when buyers made an attempt to break above the $0.09 dark pool, you can see that sellers that were previously aggressive enough to break the dark pool have now thrown up a passive defense, not only once, but twice, defending the dark pool and keeping XRP's price beneath it multiple times. So in order for us to see higher prices on XRP, the first hurdle comes in at $1.09. If we can break $1.09, the next hurdle is going to be the July monthly high at $1.16. If we can break above $1.16, then the next major hurdle before we can get optimistic of a much further recovery on XRP's price is to take out the most recent bearish lower high that created this last A to B move at $1.29. And if we can overcome $1.29, then of course, we can start to get optimistic of higher prices on XRP and hopefully start to make some video breakdowns covering these higher level sell dark pools between $1.57 and $1.98. But buyers have a lot of work to do before we get there. Now, personally, what I think is going to happen in the meantime, prepare for this, not guaranteed, but something that I think is playing out in real time, prolonging a drop down into the lower level buy dark pools at around 91 to 68 cents. With that being said, a bearish close on the higher time frame heading into August below $1.03 would definitely signal major concern for a much deeper drop on XRP's price. Taking out the buyers here and seeing their buy volume convert into sell volume with bearish sell delta held formations underneath of the dark pool, where we break the dark pool, previously acting as a support, see sellers turn it into a resistance, trapping buyers at $1.03, and then becoming aggressive would open up the door for a much deeper correction down into that 91 cent threshold. So right now, that is the most immediate bearish target underneath of $1.03 if buyers cannot defend, where they recently absorbed sell volume from the sell-off in June at $1.03. Underneath of 91 cents, we also have that 68 cent threshold. And then, of course, just in case a major liquidity crisis and huge liquidation event takes place, like the unwinding of the yen carry trade or something to that stature, coming back over here to the X, I did put out the lowest level deltas that our software has generated just in case. Mark these off on your charts, set alerts and alarms, especially if you're a long-term hodler, because these would offer great and phenomenal buying opportunities. It is not guaranteed, but I know for me personally, I definitely will be accumulating some XRP at these levels if they did come into fruition. And that is anywhere between 44 to 51 cents with a buy delta resting at those levels. So you guys now understand why the market sentiment is risk off. You now have levels heading into August to be mindful of and paying attention to. You also have heard an outlook from an institutional representative at Morgan Stanley tell you guys that right now is a great time to start to allocate into the digital asset ecosystem and consider having exposure. None of this is financial advice. Many blessings to you guys. Enjoy your weekend, and I'll see you all in the next video breakdown.